Hey there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage, and welcome to another edition of Java with Jared. Hope you guys are doing fantastic, and once again, happy Friday. Well, here's what's happening with interest rates this week. Rates continue to improve, as they have been improving over the last almost 2 weeks, Monday through Thursday of this week, and that was primarily due to a weak stock market as well as some very, very low inflation numbers. Now remember, inflation is interest rates' arch enemy. Inflation is also something that the Federal Reserve is trying to have happen in the market because inflation causes just overall economic growth. And so low inflation is typically going to be really good for interest rates. And that also low inflation number is going to really affect the Federal Reserve's decision on when they're going to increase short-term credit. But here's what the numbers were. We first saw the Producer Price Index come out, and Producer Price Index measures inflation at the producer level. That showed a decline of 0.3%, and the core rate was up 0.3%. So the core rate strips out the volatile food and energy component of the numbers. So that being up 3%, but the headline number being down 0.3%, shows that, these low energy prices are having an overall effect on the inflation numbers, which we all knew anyway. Now, the Consumer Price Index showed a decline of 0.4%, and the Consumer Price Index measures inflation at the consumer level, what we all see when we're buying products. So that was a lot lower than expected. And actually, the year-over-year number for the Consumer Price Index is only up 0.8%. The Federal Reserve's target is to have inflation be at 2%. So you can see we're way off these numbers, and that's going to keep the Federal Reserve really from increasing short-term credit because they don't want to curb the economy because there's just not enough inflation there anyway. So
Testing.
Really, everybody, or a lot of experts, were predicting that the Federal Reserve would start to increase short-term credit, the Fed funds and discount rate, sometime in June. I don't think that's going to happen, and now experts are beginning to change their minds. So that's going to keep interest rates pretty good for at least the first half of the year, based upon just those numbers. Now, today things did change in terms of the rally in terms of interest rates, and we're seeing interest rates kind of take it on the chin today. They're not doing very well. Now, we're still much better than where we were even a week and a half ago, but this rally has kind of quelled here a little bit and is taking a breather, and that's because we saw just a huge surprise in the consumer confidence number. That came in at 98.2, and that was the huge gain, and it was the biggest increase that we've seen and best number in about 11 years. So that's huge. Expectations were for about 94% or 94, and last month it was at a little bit over 93. So you can see the consumer out there is feeling super confident, and that is hurting interest rates a little bit today. But overall, I think that's a really good sign because a very confident consumer buys houses. And I think this is a fantastic opportunity for all of us to get out there, call our customers, wish them a very happy new year, find out what their housing plans are, because a confident consumer is going to buy a house, and likelihood is that we might run into customers that are thinking about and feeling good enough to go buy a house this year, maybe sell their house, so it will overall add to better business. And over the next week, what I plan on doing too is to get you some charts that show why they should go out here and buy a house now, because it'll show the effects of what maybe higher rates at the end of this year might do along with appreciation, and we can show them why it's such a great decision to buy a house today and how it will improve the overall numbers dramatically over a course of a mortgage by being able to finance at really low rates and to buy it now before inflation continues to happen. So that's what's going on with interest rates. Everything looks real good. We're probably taking a little bit of a breather here from the rally, but I don't think that that's going to last for a long time, but we'll keep you informed. If you ever have any questions, please give us a call. Thanks for joining me with Java with Jared, and we'll talk to you soon. Bye-bye.